Good morning. Pre-market, 5:48 a.m. Pacific Standard Time. Today's date, 6/15/2001. Pre-market futures right now, as I said yesterday, with your little one-day boy wonder rally because the Chinese came out with data that, oh, maybe I'm not going to have a hard landing. Look it. Today, I said you're going to have a big gap down in the options expiration volatility this week that will end Friday. And I am hearing right now bomb attacks have been reported against government buildings. Riot police have deployed armored trucks and tear gas against protesters. That must be something else going on in the world. However, let's get back to the futures. Dow futures down 105 handles. How do you like that? Nasdaq futures down 20.25 handles. How do you like that for the bull? Because of their irrational exuberance, they have to pay a price from yesterday. And we, MMTs, we recorded everything yesterday. And I told everyone before Monday before Monday morning in pre-market, that you were going to have a big up day. Because the call side got some premium. Sorry, they got that premium yesterday off of a worldwide headline. But let's take a look right here. SPWRA down. SPWRB down. ISRG down. Apple, Google, doesn't matter. The bull. The gains that they got yesterday, they're going to go down. But one of the things we're going to be talking about on this gap down this morning is how to trade that gap down. So, huge open gap down on the Nasdaq comp. Now, on the gap open up, you don't even have one. Not one. But I can tell you one that you want to look at, and that's this one. That's this one. That's the bear. And the bear closed at 27.73. That's the SQQ. That's the other side of the bull. So that's gapping up. And you have that short cover squeeze, price volatility, and all the gimmicks that go in with it. Not one. I got a qualifier, 1.01 ratio. Ha ha. How about that, everybody? Gap open up, gap open down. Futures are gapping down big. What we're going to be taking a look at today, primary focus now. Do they step back in and feel that they're getting such a great deal? U.S. dollar futures, 75.54, up 84 pennies. Regular U.S. dollar index, plus 1.04%, 75.10, up 0.76. So we've got a strong dollar today, and we'll be taking a look in the energy and the commodity-related areas. One of the things that MMTs will be taught about is today is the third day of the monthly options expiration. That means that the call side got a pop yesterday, but they're going to give it all back. Yeah, they are. And you would think that your economist pundits and your TV pundits, financial reporters, what do they know? And the thing about it is the public sucks it up every day. And you know what? You got to be educated around it. If you want to get that, you go to stockmarketpundit.com and get on board now. Otherwise, you will continue to suffer. The gap open down, once again, is a long list. When all of these short squeezes that happened yesterday was all electronic, and a lot of it is artificial, using the futures yesterday and electronic robots that do buys and sells on probabilities with supercomputers down there next to Wall Street. And we're going to see if that bull comes back in. One thing we will be monitoring is how strong it is now. If we come up off of that bottom, and if the bull does want to come in, we'll know by looking at our SMF application. Our market maker trading application will tell us what that's all about. So if we bounce off the bottom, you got to go a certain distance off of the bottom, but they're going to roll over. Okay? And the thing about it is all of the key indexes have more room to go down. And every one of those rallies that we've seen yesterday and previous, and we have them all recorded. They're all right here every single day on how to trade, how to make a market with the public, all right here. So we'll be looking at where they come in, because the shorts will come in on the open. The market makers will try to take the tape higher then roll them up before they roll over. I will do the New York Stock Exchange next. The economic data, just so people know, is that it was not that favorable in my view, but we already knew that. And the thing about it is, in India, you closed down 1.0 with financial seeing weakness ahead, and so India was down. China, the Shanghai Composite was down 0.9% as financials and real estate shares saw the heaviest selling. Once again, anybody that was buying those financials the other day that I was talking about, they were crazy, man. I don't even know. It's really something. In Hong Kong, the Hang Seng finished minus 0.7%. What let it down again in that country? Financials. People's Bank of China lost 1.3%. The Nikkei down, well, that actually mustered out a little teeny bit of a gain. Okay? And Australian shares fell on rate hike expectations. And let me tell you, the People's Bank of China hiking its reserve ratio 50 basis points to a record of 21.5% following yesterday's close, while India shares dropped on expectations of a rate hike. So that's what's going on around the world, right along with our gap down. So you know a little bit, MMTs, and today we're gonna trade it like a champ. 2-year, 3-year, 5-year, 7-year, 10-year, 30-year is plus 0.5 30 seconds at 101.13 second. And the 10-year is it's plus 7.30 seconds as well. And the 7-year, well, we'll see what these do today. Okay? Anyway, it's time to make money. And that's what we're here to do. And the thing about it is, in price action volatility, as stock market funding clearly told you people, that you would have increased price volatility until when? Till the end of the summer. And yesterday's attempted rally, we know that bottoms are not put in one day. Bottoms have a character pattern and a price pattern to them, and a psychological pattern called sentiment patterns.